Did you know that UK retirees lose billions of pounds every year to scams, fraud, and financial mismanagement? That's right. Years of hard work, careful saving, and planning for retirement can vanish in an instant. But here's the real shocker. Many of them don't even realise what's happening until it's too late. Imagine waking up one day and discovering that your pension has been drained, your investments have collapsed, or your own family has taken advantage of your trust. Sounds like something out of a nightmare, right? Yet thousands of UK seniors are living this reality right now. And the worst part, most of these financial traps are completely avoidable if you know what to look out for. In this video, we're exposing the 10 biggest reasons why seniors are losing their life savings. Some of them are so sneaky, even the most careful individuals are falling for them. From sophisticated scams and pension fraud to skyrocketing living costs and bad financial advice, we'll break it all down in a way that's easy to understand. If you think this can't happen to you or someone you love, think again. The financial threats facing seniors today are more dangerous than ever. Stay with us until the end, because knowing this information could be the difference between a secure retirement and financial disaster. Let's get started. Number 1. Scams disguised as investment opportunities. Scammers are getting smarter, and many UK seniors are falling victim to fraudulent investment schemes that promise high returns but ultimately leave them with nothing. These scams often appear legitimate, using professional websites, fake endorsements, and even fabricated customer testimonials to lure in unsuspecting investors. One of the most common schemes is cryptocurrency fraud. Seniors are targeted with ads and cold calls promoting exclusive investment opportunities in digital currencies. These scammers often claim that major banks or celebrities have backed their projects, making them seem credible. Victims are pressured to invest quickly before they miss out, only to find that their money disappears without a trace. Another dangerous trap is property investment fraud. Many seniors, looking for a safe place to grow their savings, are convinced to invest in off-plan developments or overseas properties that either don't exist or fail to materialise. The promise of steady rental income or massive resale value is often a lie, and victims are left with worthless contracts. Ponzi schemes are also on the rise, where new investors' money is used to pay returns to earlier investors. These scams collapse when new funds stop coming in, leaving the last round of investors, often retirees, empty-handed. To avoid these traps, seniors should always verify investment opportunities with the Financial Conduct Authority, FCA. Avoid pressure tactics and never send money to unverified accounts. Speaking to a trusted financial advisor before making any investment decisions is crucial. If something sounds too good to be true, it probably is. Number 2. Pension fraud and unregulated advisors. Pension fraud is one of the most devastating ways UK seniors lose their life savings. Many retirees are targeted by scammers posing as financial advisors, offering to unlock their pensions early or transfer them into high-return investment schemes. These fraudsters often use persuasive tactics, convincing victims that they are making a smart financial move. One of the most common scams is pension liberation fraud. Scammers claim they can help individuals access their pension before the age of 55 without penalties. What they don't mention is that such early withdrawals come with heavy tax charges, often up to 55%, along with additional hidden fees. By the time victims realise the consequences, a large portion of their pension is gone. Unregulated financial advisors also pose a major threat. Many retirees trust advisors who are not properly registered with the Financial Conduct Authority, FCA. These so-called experts often promote high-risk or fraudulent investments, promising guaranteed returns. In reality, they make money from hefty commissions while seniors risk losing everything. Another major issue is pension transfers into scam investments. Seniors are encouraged to move their retirement funds into unregulated schemes, including overseas property developments, green energy projects, or even fake bonds. These investments often collapse, leaving victims with nothing and no legal recourse. To protect against pension fraud, it is essential to only seek financial advice from FCA-authorised professionals. Checking credentials, avoiding high-pressure sales tactics, and thoroughly researching investment opportunities can prevent devastating losses. Seniors should also be cautious of unsolicited calls, emails, or messages regarding pension transfers. If an offer sounds too good to be true, it usually is. Ensuring pensions remain in safe, regulated accounts is the best way to secure long-term financial stability. Number 3. Rising cost of living and inflation. Many UK seniors are watching their life savings shrink, not because of scams or fraud, but due to the relentless rise in living costs. Inflation has quietly eroded the value of money, making everyday expenses significantly more expensive than they were just a decade ago. For retirees on fixed incomes, this poses a serious financial challenge. One of the biggest burdens is energy costs. Gas and electricity prices have surged in recent years, leaving many seniors struggling to keep their homes warm. Pension payments that once covered utilities comfortably no longer stretch as far, forcing difficult choices between heating and other essentials. Food prices have also skyrocketed. Basic groceries such as bread, milk, and fresh produce now cost significantly more, placing extra strain on limited budgets. Many retirees who once had a comfortable lifestyle are finding that their savings do not last as long as expected. Housing costs add another layer of financial pressure. Seniors who rent face increasing prices, while those who own homes must deal with rising maintenance expenses, property taxes, and unexpected repairs. For many, downsizing seems like an option, but the costs associated with selling a home and moving can be higher than anticipated. Medical expenses are another growing concern. While the NHS covers many healthcare needs, additional costs such as dental care, private treatments, and home assistance add up quickly. To combat inflation, seniors should explore options such as budgeting more carefully, seeking government assistance where available, and considering part-time work or alternative income sources. Reviewing investments and ensuring they're keeping up with inflation can also help preserve savings. Without proactive financial planning, the rising cost of living can quietly drain retirement funds, leaving many struggling in their later years. Number 4. Medical and care home costs. Healthcare and long-term care expenses are becoming a major financial strain for UK seniors, often consuming their life savings faster than expected. While the NHS provides essential medical services, many retirees face additional costs that quickly add up, leaving them financially vulnerable. One of the biggest expenses is care home fees. Residential care can cost thousands of pounds per month, and those with significant savings or property are often required to fund their own care. Many seniors assume the government will cover these costs, only to find out too late that they do not qualify for assistance. As a result, they are forced to sell their homes or deplete their savings to afford care. Private medical treatments are another financial burden. While the NHS covers many health needs, long waiting times push some seniors to seek private healthcare, which can be extremely expensive. Procedures such as cataract surgery, joint replacements, and dental treatments often come with high out-of-pocket costs, quickly eroding retirement funds. Hidden medical expenses also take a toll. Prescription charges, mobility aids, physiotherapy, and home modifications for accessibility can add up over time. Many seniors underestimate these costs, leading to financial strain when unexpected medical needs arise. To protect against these expenses, retirees should consider financial planning options such as long-term care insurance, saving specifically for medical needs, and exploring government support programs. Seeking advice on available benefits, such as attendance allowance or personal independence payments, can also help ease financial pressure. Failing to prepare for medical and care home costs can leave seniors in a vulnerable position, forcing them to make difficult financial and personal sacrifices. Proper planning and awareness are key to ensuring a secure and dignified retirement. Number 5. Bank fraud and identity theft. Bank fraud and identity theft are becoming increasingly common, with UK seniors being prime targets. Many retirees lose their life savings not through poor financial decisions, but because criminals exploit their trust and lack of familiarity with modern fraud tactics. One of the most common scams is unauthorized bank withdrawals. Fraudsters gain access to seniors' accounts by stealing personal details through phishing emails, fake phone calls, or compromised online transactions. Once inside, they make small, unnoticed withdrawals before draining the account completely. Card fraud is another major issue. Scammers use techniques like card skimming at ATMs or cloning debit and credit cards to make unauthorized purchases. Many seniors only notice the missing funds when it is too late to recover them. Telephone scams also play a significant role in financial losses. Criminals impersonate bank representatives, claiming there is a security breach and convincing victims to transfer money into a so-called safe account. These fake accounts are controlled by fraudsters, and once the money is transferred, it is nearly impossible to recover. Identity theft can have even more devastating consequences. Criminals steal personal information to open loans, credit cards, or even mortgages in a senior's name. Many victims only discover the fraud when they receive debt collection notices for accounts they never opened. To prevent these attacks, seniors should avoid sharing personal information over the phone, use strong passwords, enable two-factor authentication, and regularly check bank statements for suspicious activity. Banks also offer fraud alerts that can notify customers of unusual transactions. Falling victim to bank fraud or identity theft can wipe out years of savings in an instant. Staying vigilant and informed is the best defense against financial criminals looking to exploit vulnerable individuals. Number 6. Poor financial planning and outdated advice. Many UK seniors lose their life savings not because of fraud or scams, but due to poor financial planning and outdated advice. Retirement today is very different from what it was decades ago, and failing to adapt to changing financial realities can have serious consequences. One of the biggest mistakes retirees make is relying too heavily on savings accounts. In the past, keeping money in a bank was a safe way to preserve wealth, but with rising inflation and low interest rates, savings accounts often fail to keep up with the cost of living. This means that money sitting in a low-interest account is losing value over time. Another common issue is withdrawing too much too soon. Many retirees underestimate how long they will live and how much they will need to sustain their lifestyle. Without careful budgeting, savings can run out faster than expected, leaving seniors struggling in their later years. Outdated financial advice is also a major problem. Many seniors were taught to avoid investments due to perceived risks, but modern financial planning emphasizes balanced portfolios that can generate steady income. Avoiding investments altogether can lead to missed opportunities for growth, while relying solely on pensions and savings may not be enough. Failing to plan for unexpected expenses is another mistake. Medical costs, home repairs, and rising living expenses can drain savings quickly if not accounted for in advance. Without an emergency fund or flexible financial strategy, many retirees find themselves in difficult situations. To prevent financial hardship, seniors should seek updated financial advice, diversify their income sources, and plan realistically for long-term expenses. Working with a qualified financial advisor can help create a strategy that ensures financial security throughout retirement. Proper planning is key to preserving wealth and avoiding financial struggles later in life. Number 7. Pressure from family and financial abuse. Financial abuse within families is an uncomfortable reality that many UK seniors face. In some cases, loved ones who should be offering support end up exploiting their elderly relatives, leading to devastating financial losses. This type of abuse is often subtle, making it difficult to recognise until it is too late. One common issue is undue pressure to give financial help. Many seniors feel obligated to support their children or grandchildren, even when it puts their own financial security at risk. Whether it is helping with a mortgage, paying off debts, or covering daily expenses, these contributions can quickly drain retirement savings. Some elderly individuals also feel guilty about saying no, especially when family members claim they are struggling. Another serious problem is direct financial exploitation. In some cases, relatives misuse power of attorney privileges, withdrawing money for personal use rather than for the senior's well-being. Others may persuade an elderly relative to sign over property, bank accounts, or investments without fully understanding the consequences. Some seniors are even tricked into changing their wills under pressure. Scammers outside the family often use emotional manipulation as well. Romance scams, where fraudsters pose as loving partners online, are increasingly targeting older individuals, convincing them to send large sums of money. To protect against financial abuse, seniors should keep control over their finances, set clear boundaries with family members, and avoid making large financial decisions under pressure. Appointing a trustworthy power of attorney and keeping financial records private can also prevent exploitation. Seeking legal advice before making significant financial changes is crucial. Financial security should never come at the cost of family relationships, but is essential for seniors to protect themselves from emotional manipulation that could leave them financially vulnerable. Number 8. The impact of sudden economic crashes. Economic downturns can have a devastating impact on UK seniors, especially those who rely on pensions, investments, or savings to fund their retirement. Unlike younger individuals who have time to recover from financial losses, retirees often have limited options to rebuild their wealth after a market crash. One of the biggest risks is stock market volatility. Many seniors invest in stocks, bonds, or retirement funds expecting stable returns. However, economic crashes can wipe out a significant portion of these investments almost overnight. Those who panic and withdraw their money during a downturn often lock in their losses, leaving them with far less than they had originally saved. Pension funds are also vulnerable. Many company pensions are linked to market performance, meaning a financial crisis can reduce payouts or even lead to pension scheme failures. Retirees depending on private or workplace pensions may find that their expected income is suddenly lower than planned. Property values can also decline during economic recessions. Seniors who plan to sell their homes and downsize may face reduced property prices, forcing them to sell for less than expected or stay in a home they can no longer afford to maintain. Rising inflation during economic instability further erodes savings. Everyday expenses such as food, energy, and healthcare become more expensive, while fixed incomes remain the same. This forces many seniors to dip into their savings faster than planned, increasing the risk of financial insecurity. To safeguard against economic downturns, retirees should diversify their investments, keep an emergency fund, and avoid making rash financial decisions during market crashes. Seeking professional financial advice can help create a strategy that minimizes risk while ensuring long-term financial stability, even during uncertain economic times. Number 9. Downsizing disasters and property pitfalls. Many UK seniors see downsizing as a smart financial move, expecting to free up cash by selling a larger home and moving into a smaller, more manageable property. While this strategy can work, unexpected costs and poor planning often turn it into a financial disaster, wiping out savings instead of preserving them. One major issue is underestimating the true costs of moving. Estate agent fees, legal expenses, stamp duty, and removal costs can add up to thousands of pounds. Renovations or modifications to a new home may also be needed, further reducing the financial benefits of downsizing. Some retirees assume they will walk away with a large profit, only to find that transaction costs significantly eat into their expected savings. Another common problem is choosing the wrong property. Many seniors rush into buying a retirement home without fully considering long-term needs. For example, they may purchase a property in a complex with high service charges or restrictions on resale, making it difficult to recover their investment later. Some retirement villages also impose exit fees, leaving seniors with far less than they originally expected when they decide to sell. Market conditions can also be unpredictable. Selling during a downturn or in a slow-moving market can result in lower than expected offers, forcing retirees to accept losses or stay in a property they no longer want. Additionally, some seniors move too far from family and support networks, leading to increased living expenses and unexpected loneliness. To avoid these pitfalls, careful financial planning is essential. Seniors should fully research property costs, consider future care needs, and seek legal and financial advice before making major housing decisions. Downsizing can be beneficial, but only when approached with realistic expectations and a well-thought-out strategy. Number 10. Bad financial products and mis-selling scandals. Many UK seniors lose their life savings due to poorly advised financial products and large-scale mis-selling scandals. Banks, insurance companies, and financial advisors often promote investments or policies that are not suitable for retirees, leading to devastating financial consequences. One of the most well-known examples is the mis-selling of payment protection insurance, PPI. For years, banks sold PPI alongside loans, credit cards, and mortgages, often without fully explaining the terms. Many retirees paid into these policies without realizing they were ineligible to claim or that the coverage was unnecessary. While compensation schemes have helped some victims recover losses, countless others never received refunds. Annuities have also been a source of financial loss for many seniors. Some retirees were misled into purchasing annuities that did not suit their needs, locking them into low-income payouts for life. In some cases, individuals with health conditions that should have qualified them for higher payments were sold standard annuities, resulting in thousands of pounds in lost benefits. High-risk investments are another common problem. Many financial advisors, driven by commission incentives, have encouraged seniors to put their savings into complex or volatile investment schemes. From overseas property developments to unregulated bonds, these products often promise high returns, but instead lead to financial ruin when the investments fail. To avoid falling victim to mis-sold financial products, seniors should always seek advice from independent and regulated financial professionals. It is crucial to read all terms carefully, ask questions, and never feel pressured into making quick financial decisions. If a product sounds confusing or too good to be true, it is worth taking extra time to research before committing. Protecting savings starts with awareness and ensuring that every financial decision is made with long-term security in mind. The truth is, financial security in retirement is not just about how much you've saved. It's about how well you protect it. Scammers, bad investments, rising costs, and even loved ones can all play a role in draining your hard-earned money. But now that you know the biggest risks, you have the power to fight back. Awareness is the first step. Taking precautions, asking the right questions, and never rushing into financial decisions can save you from devastating losses. If you or someone you know has faced any of these financial pitfalls, it's time to take action. Seek advice, stay informed, and most importantly, never assume it won't happen to you. Your financial future is too important to leave to chance. So what do you think is the biggest threat to retirement savings today? Share your thoughts in the comments. We read every single one. We put a lot of effort into making these videos to help you stay informed. So if you found this valuable, please hit that like button and subscribe to our channel. It's just one click, but it means the world to us. Stay safe, stay smart, and we'll see you in the next video.